welcome to Morning Trade with Moneycontrol. I am Nandita Khemka. Well, what a spectacular rally it was on Wall Street last night, which saw the Nasdaq surging over 7% and the Dow clocking its best rally since 2020. Well, we'll put all that into perspective and also discuss the trade setup for the Nifty today with our guests on the show. But before we go on to that, let's see what the top headlines are at this hour. Well, Wall Street clocks biggest one-day rally since 2020 as US inflation cools off. The Dow rose over 1,200 points while the Nasdaq surges nearly 7.5% as CPI for October comes in at 7.7%. Now, Asia is too notching a stellar rally while the SGX Nifty is hinting at a dash at 18,400. European markets surged nearly 3% after a cool-off in US consumer prices offers hope that inflation may have peaked. Tech stocks log handsome gains to the tune of 7% or so, leading gains as majority of sectors and all major bourses closed in the positive territory. And also stocks in the spotlight today are Eicher Motors, Zomato and Trent. Well, before we move on to our first guest, let me remind our viewers to send in your stock-specific queries with hashtag AskMC and we will have them addressed on the show. But to the top story then, the US CPI has cooled off to 7.7% and that has triggered a massive rally on Wall Street overnight. Now, what will the Fed's trajectory be going forward? Well, to discuss that and a lot more, we are now joined by Peter Cardillo of Spartan Capital and to take this discussion forward. Good morning, Peter. Good to have you on the show. Well, markets have rallied on hopes that inflation may have peaked out. Do you believe that it has peaked out?
Yes, I think it peaked out actually about 2 months ago, even though we had 1 month where we saw core rate actually move higher than projected estimates. But again, the overall picture is pointing in the right direction. And while the inflation level is still rather elevated, the fact is that we are beginning to see some of the structural inflation beginning to cool off, and that is obviously mostly in the housing sector and certainly in the service sector.
Right, Peter. Do you expect the pace of interest rate hikes by the US Fed to temper down a bit going forward now? For example, for the December meeting, would you expect a 50 basis point rate hike now, or would you expect the Fed to press along with a more aggressive stance and go for another 75 basis points?
No, I think they'll go for 50 basis points in December. And I think there's a real good possibility if we see another decline in core and in top line inflation in the month of December, that they may take a wait-and-see attitude. So a pivot is not out of the question, despite the continued hard rhetoric that comes out of the Fed.
Right, Mr. Cardillo. The dollar has logged its worst day since 2009. In fact, it has been cooling off against a basket of currencies in the recent days. What is your outlook on the dollar index going forward?
I don't think we've seen the dollar actually peak just yet. I think we're going to go higher. What we saw today, obviously, was a lot of traders taking new short positions, and that forced the dollar. And by the way, I'd like to comment also on the big stock rally that we had. A good portion of that was due to short covering, and obviously that's why we had such a powerful rally.
So, do you expect this rally to continue going forward, or was it just like a temporary pop?
No, I think it'll go forward. Obviously, I don't think we're going to see what we saw yesterday, but I think we'll go forward. I think that after today's action, we can say that the bear market probably came to closure. And I based that on heavy volume that we had on the upside today, massive short covering. And if you look at the VIX index, something that hasn't happened in a while did take place during yesterday's rally. And what I'm suggesting is that when the market was under severe pressure and going down and actually making new lows, we never saw the VIX index flash panic in the market. In fact, it was rather dormant. But today, the opposite happened. It actually declined. And so that's a good sign that we've probably seen the end of the bear grip and the grab market in general.
Right, so volatility cooling off is a good sign. That's what Peter has to say. But then lastly, I want to ask you, where do you see the Fed funds rate settling in? Most experts were suggesting a rate of somewhere around 5% by the end of March. But now it seems that it will be a little lower than that. What's your view on that?
Yes. Before we talk about the Fed funds rate, I just want to say that just because the bear might be dead, or that the big grip is now behind us, that doesn't mean that we can't go lower. I just don't think we'll make new lows. As far as the Fed funds are concerned, I kind of think they're going to top out around 4.25%, 4.5%, which means a 50 basis point hike in December brings us pretty close to that level.
Right, 4 to 4.5% is where the Fed rates may settle in. That's the view from Peter. So thanks a lot for taking out time and joining us and sharing your thoughts with us, Peter. Appreciate you joining in. Well, moving on, let's get in another guest on the show. That's Hemen Kapadia of KR Choksi Securities. Good morning, Hemen. Thanks a lot for joining in. All-round cheer across the globe. Wall Street saw a huge rally. We are witnessing a rally across Asia as well. SGX Nifty is hinting at a start at around 18,400, I beg your pardon. So all bullish. So looks like we are going to kickstart the day at somewhere around 18,400.
A very good morning to you, Nandita. Thank you for having me on the show. Yes, absolutely. Sad part is that we lost the semi-finals yesterday, but the markets seem to be in ebullient mode. And like the previous guest mentioned, I think the VIX is down and the dollar index is also, if I look at it from a slightly 8-month point of view, it's probably finished the 8-month move. Some of the mechanical indicators on the weekly chart have shown that the dollar index seems to have peaked. The VIX over here has consistently sustained below 16. Normally, it would mean that we don't see a very big move on either side. But okay, this is exceptional based on foreign cues. But if the VIX is below 16, I think you don't expect the market to go down. Obviously, today is a very positive gap up. So our setup is fine. 18,300 is something that we need to take out. The Bank Nifty has spent 11 trading sessions over here between 40,800 and 42,000. So a close up of this and a close up of 18,300 should trigger off an upside and probably a test of all-time high. So markets are poised well. Today is Friday, Nandita, so we need the weekly charts to end. So if they end like the opening is suggesting, I'm not sure if such a strong gap up is going to be sustainable all throughout the day, but it does. Then I think we're breaking out from here, and that would also mean that the all-time high would be a cinch, but the closing today would be crucial, Nandita.
Right, the closing today will be crucial, and we have also been witnessing last hour buying kick in and stem the losses that we generally see over the course of the day, over the last 2-3 days. But moving on to specific stocks now, the first one on my list is Eicher Motors. It has registered its highest ever quarterly revenue and profits. But if you look at the stock, it was under pressure for the last few days. It has come down from levels of 3,760. But do you expect the good numbers to fire up an up move on this stock?
Well, yes. The auto index has been favored spot over the last few months when the markets were a bit wobbly, Namita. And that setup still hasn't changed. And if you look at Eicher Motors over the past 7 months or so, we moved from sub 2200 to 3900. So yes, I think the number should fire up the stock, but it made a recent swing high at 3890 almost on 1st of November. Nandita. Now that needs to get taken out because historically, I just like to point out one thing that we've never closed above 3782 on the weekly chart ever in listed history. So we are at the previous swing highs, resistance levels, and it's a hurdle. I'm not saying it's a reversal. It's a hurdle which needs to get taken out.
Right, 3780 hurdle needs to be taken out by Eicher Motors. Moving on to the next one, this is Zomato. Losses have narrowed on a year-on-year basis. The company expects to break even in the next 2 to 4 quarters as it hopes to bring down its operating expenses. If you look at the stock, it had hit levels of 40 or 41 around July, and from there it has made a smart comeback to levels of 60 or some or thereabouts. Do you expect buying to come in at these levels now that the company has said that it may really break even in the next 2 to 4 quarters?
Yes, Nandita, I think that's a distinct possibility. For the last 4 months or so, Zomato has been trying to overcome the 70 level. That's not worked out. But after 4 months, looking at the setup now, one gets the feeling that there's going to be another attempt at this level. If that doesn't happen this week, next week. But yes, we formally need a closing above 70. If that happens, it would mean two things. One, a breakout, and also the triggering of an intermediate uptrend from here, Nandita. So it's interestingly poised, and the picture slowly but steadily is turning positive on technical parameters.
Well, picture turning positive for Zomato. Moving on to Apollo Hospitals, it has reported a 20% drop in its profit on a year-on-year basis. The operating performance has also been pretty weak. Over the last 2 sessions, the stock has come down from 4,400 levels or thereabouts to somewhere around 4,280 levels. Going forward, do you expect it to fall below the 4,200 level?
Well, frankly speaking, we stagnated for this, I believe, the 18th or the 19th week, Nandita, in a range between 4,000 on the downside and 47 on the 4,700 on the upside. And I think you made a nice point. 4,200 is support. If that gets taken out, we test 4,000. But after 18 weeks of a move between 4,000 and 4,700, unless and until there is a decisive breakout on either side, there won't be clear trending move. Currently, there's a negative bias, at least on the short term, which translates into a weekly negative bias, especially on a close below 4,200, which could be tested today, Nandita.
Right. The last stock on my list is Trent. It has reported a drop in profits due to higher input costs. When you look at the stock, over the last 6 months, it has given a healthy 40% return. Going forward, what is your outlook on some of these retail stocks like Trent, Shoppers Stop? Do you expect them to do well on the back of good demand?
Well, frankly speaking, if I look at the long-term charts, Nandita, I have data from 85. I don't have data before that. So we remain in an uptrend. So the way I look at it, we are in a 32-year-old uptrend, and it doesn't seem to be in a mode to stop now. Higher tops, higher bottoms over the bigger time frame. Mild overbought situation, but keeping in mind the quantum of the up move, I mean, that's only natural and can be expected, but no major reversals, no negative divergences. So it's safely ensconced in a long-term uptrend. Nothing much to worry. As far as Shoppers Stop is concerned, I don't have that much of data, Nandita, to take a call. But if I were to look at over the last few years, all-time high, same logic applies, higher tops, higher bottoms. Once again, it seems a tad bit overbought. We're on the cusp of entering a correction on the weekly chart as far as Shoppers Stop is concerned.
Right, let's quickly move on to our queries segment then. A lot of queries coming in this morning. Himen, the first one is coming in from Vish KL, and he wants your view on Karur Vysya Bank. The shares were down somewhere around 3.5% in yesterday's session. What should he do?
That bit overbought. Okay, everything opened the gap up today. But after reality checks in, we've entered a short-term correction, a lower top, lower bottom. So I believe that we could be cooling off a bit. I mean, that's absolutely fine. We moved up from 44 to 106 in the last 4 months. So I think we're on the cusp of entering a correction. For this correction to come to an end, weekly close up of 106 at the must.
Right, on the cusp of a correction. On to the next one. This is coming in from Sanjay Chaudhary, and he wants your view on RITES. The stock saw quite a bit of selling pressure in yesterday's session, down about 6.5% or thereabouts. What's your view on this one?
I'd say profit booking, once again, the same logic applies. If the stock goes up from 225 to 430 in 4 months, that's what, almost 100% move. We are ripe for a correction, and that's what I believe has happened. 360 support. That's where it should take. It should sort of take a breather. If we close below 360 after a bounce, that's where the concern of a correction of a bigger degree setting in. That's what would happen.
Another query from the banking space. Satya CK has written in, and he wants to know your view on RBL Bank. He wants to know whether he should hold or sell. Now, over the last month or so, it has given returns of somewhere around 15%. Do you advise him to hold on to the counter?
I guess so. The past record has been abysmal, frankly speaking, Nandita. Bank Nifty posted a new high. State Bank, ICICI Bank, many so banks have posted new highs, Federal Bank. But the high for RBL Bank was around 720 in 2019, and we went to see 80 after that. Okay, that's history. Currently, it seems in an intermediate uptrend. We are running into resistance at around 140. So as of now, it's a hold. So it sustains above 140, and in a weekly close, we go towards 157. So past record notwithstanding, currently seems better. Nandita.
Right. Let's move on to the next one. This is coming in from Sharan, and he wants your view on Pyramid Enterprises. Numbers are pretty weak. The stock reacted to its earnings yesterday, down somewhere around 8.5% or so. What should investors do now?
Well, frankly speaking, we are hanging on for dear life, so to speak. This is what, 17 months of a downtrend in Pyramid Enterprises, Nandita. High of 1650, we are at 811, and 800 is significant longer term support, and like you said, we are hanging on to dear life over there. Short term picture seems a bit oversold, so that provides some respite. Simply put, if it closes below 800 on the weekly chart, that means further downside. Otherwise, it would probably try to stabilize over here. But if things were to turn for the better, 915 needs to get taken out.
Right. Let's move on to the next query then. This one is coming in on Bajaj Finance. Unni S. Kumar has written in, and he wants your view on this counter. Stock has been under, I think, in a bit of a downtrend over the last 1 month. It has dropped somewhere around 3% or so. What do you advise him to do?
Well, he's inquired about finance. Finserv looks better, but coming back to finance, like you said, we've gone nowhere. And frankly speaking, it looks slightly like a toppish head and shoulder pattern. But for the breakdown to happen, we need a close below 6818. So distinct downward negative bias. But yes, till we don't close below 6818, we take this as a correction. Once again, 5200 to 7800, we're seeing a time price retracement. Below 6800 means we've entered a correction of a greater degree.
Right. On to the next one. This is coming in on Titan. Arnav Sharma has written in. Now, the stock has been correcting ever since it reported its quarterly earnings. Do you think that it will snap out of that anytime soon?
The setup seems to have gone just a tad bit bad, Nandita. Short-term picture after negative divergence oscillator sell, that's got spoiled. If I look at the weekly charts, I believe it's in a rising wedge, which is basically a bearish pattern. So frankly speaking, we seem on the precipice of a decline. 2768 was the earlier swing high, which we haven't been able to take out. So I'd say once again, because of the gap up, I'm slightly filled with trepidation about how negative one should get. But yeah, the setup gets spoiled, has been degrading just a bit. A closing today should be important, but till we don't close below 2750, this negative hangover remains.
Right. Next query from the auto pack. Suvro has written in and he wants your views on Maruti. I think of the last 5 sessions, it's just been in a downtrend, down about 2% or thereabouts. So what does the future look like for this one?
Well, frankly speaking, it seems like a short-term correction, but otherwise the setup is fine. We saw an upward bar reversal coming in last month, Nandita, and we remained within that range. 10,000 is the all-time high. We went to 9,800 almost. So I'd say it's taking a breather, a small correction. I don't think 8,900 breaks. That's not very far away, but 8,900 is important. So bigger picture seems clearly positive. Short to medium term, there is a correction which might take a few weeks to play out.
Right, the next query comes in from Rajesh Rajagopal and he wants your view on Tanla platform. What would you advise him to do?
Fallen off a cliff, 2,100 to 600 in a matter of months. Short term, the picture seems to be oversold. On the medium term, okay, it's trying to stabilize. The range is between 900 on the upside and 684 on the downside. And this range has been valid for around 12 weeks. So frankly speaking, it's trying to stabilize and form a base. So if 684 holds, that's a small positive, not small, a decent positive. And we take out 900, that means we are looking at a corrective bounce back. So I wouldn't be bearish over here unless it breaks 684. I believe maybe a few weeks more of consolidation, but a recovery is around the corner. But these levels need to get respected.
Right. The next query is from the mid-cap IT space. Piyush Mishra has written in and he wants to know your views on Zensar Tech. Now, if you look at the charts, it has fallen quite a bit when it comes to the last 6 months. It's down somewhere around 28% or thereabouts. And we have seen the technology pack getting beaten black and blue in the last few months. So what would you advise investors to do with this stock?
Firstly, disclosure, me and family have a holding in the stock. Like you said, it's actually been beaten black and blue. I mean, the stock goes from 580 to 220 or so. 208. Stock is getting oversold, but the oversold does not mean there's going to be follow-up buying. And for that thing to fructify, we need a close-up of 230. So, except oversold, I don't think there is any saving grace for the stock. Yes, and if it breaks below 200, further pain. So, I'd say it's trying to stabilize. Doesn't break 208, closes about 230. That would be the first technical green shoot in months.
Right, well, that wraps up our query segment for today. But Himen, before I let you go, what are you recommending for our viewers this morning?
Okay, couple of stocks which look interesting. Firstly, a buy call on IGL. Both are trading buy call. We are in an intermediate uptrend. We are in a flat pattern as of now. We set for a breakout. We haven't yet broken out. Currently, we're at 419. So buy at 419, stop loss 409, target 439. It's a modest target, I believe, that could get overshot. Secondly, is HDFC Bank. I think private sector banks have taken a backseat for the time being, which is very surprising. Looking at the way Can Bank, Bank of Baroda, and State Bank have moved. But I think they're taking their place back in the sun. So Kotak looks like recovering. HDFC Bank is a buy at 1524, that's the closing. Stop loss 1494, target 1584. Stock looks set for a breakout from here after a decent consolidation. Nandita.
Right, IGL and HDFC Bank, two of the two counters that Himen is recommending. Before I let you go, Himen, we may be ending the week on a good note for the markets, but as you mentioned, we did lose the semi-finals yesterday. So looks like you have made your plans for Sunday now.
Well, one should not sound negative, but frankly speaking, it's better we lost to England than losing to Pakistan. That would have meant sleepless nights. But I don't know. I just felt that KL Rahul and Rohit Sharma didn't perform as expected. But yes, Sunday should be a stress-free final. At least we'll be rooting for England, obviously. Andita.
Sure, rooting for England. That's the view from Himen. Thanks a lot for joining in this morning, Himen. Look forward to having you on the show sometime soon. Well, with that, it's a wrap on this edition of Morning Trade. But don't go anywhere because coming up next is Markets with Santo and CJ.